Hi guys, in this episode I'm going to tell you 3 strategies about how to get into property with no money. So this is starting from ground zero and getting into property. My name's Adam Panisi. I share my knowledge over the last 11 years being an investor and a property developer, doing a couple of $100 million of my own property development projects. So 3 ways to get into property, basically starting from zero. And when I say basically starting from zero, you're gonna need some money. That might be a couple of $100 or a couple of $1,000. 1, to get educated. 2, to maybe put down some very basic initial deposits. But if you don't even have that, I'll tell you a way to get that as well. So the first one that I've got, which is what I did in my very first deal, so the first strategy, get into property with no money, is do vendor finance. So vendor finance, the vendor is the seller of the property. So they finance you into the deal. So they finance your deposit, and they also will need to finance your stamp duty if you're settling that property as well. So number 1, vendor finance. How do you do vendor finance? You go to the vendor, you offer them more money for their property, and you ask them to finance it. After a period of time, you then add value to that property, or you wait for the market to increase, and then you refinance at the higher amount, as in the increased value of the property, and then you repay the vendor finance portion. So that's vendor finance in its simplest form. That's what I did when I did my first property development. And in actual fact, I didn't put in any money at all. I vendor financed the entire amount. I think I might have put down maybe a couple of $100 as an initial deposit. But that's one way to start in property, whether it's your own home and it's your first home, or whether you are doing a smaller property development deal or even a larger one. I still use that strategy even now, where the vendor finances the deal. So that's number 1. Number 2 is go and get a personal loan and use that as the deposit. Now, a lot of people might be scared off by getting a personal loan. You've got to make sure you don't get the personal loan before you go and get the loan for the property. Otherwise, it's going to destroy your serviceability. But a lot of banks now, and I remember in the early days, I got an automated personal loan because I was making money, and the bank obviously has AI, artificial intelligence, that monitors your bank account and works out how much you can afford. So back when I was 20, whatever I was, early 20s or mid 20s, on one of my deals, I went and got a personal loan for 50 grand. It was an automated loan that I just applied online. It was with the CommBank, and I used that as a deposit to buy more properties. And then I actually used it not only as a deposit, but then I used it to do renovation costs as well. So the interest rate is much higher for personal loans. I think back then it was 15 or 16%. But without paying that interest, I wasn't able to buy the property and then do the renovation on it. So 50 grand, it doesn't get you far, but it might be good as a top up. Or if you are buying your first house, and you've got no stamp duty to pay on it, 50 grand still going to get you into, if you got 10% deposit, that's still going to get you into a $500,000 house. So it is entry level, but if it's getting you into a property that's your own versus trying to save up for maybe a few years, or some people may not be able to save 50 grand, or may be able to save 50 grand over 5 years, so $10,000 a year in savings. So you've just saved yourself 5 years from buying a property. And in the next 5 years, who knows where the property market's going to be. But even if in the next 5 years it grows by 10 or 20%, a 10% growth in your property just by doing nothing, there's another $50,000 there. So you've effectively just doubled the amount on your personal loan. So just keep in mind you've still got to be able to pay off the personal loan. So a lot of them are 5-year terms. So you've just got to work out the repayments over the 5 years and make sure you can afford to pay it, at least in the short term. Again, you want to be buying property under market value and then adding value to the property so that you can then get a higher valuation, refinance the property, refinance out that personal loan and pay it back. So that's strategy number 2 to get into property with no money. Number 3 is a little bit more creative. It does involve you adding value before you even own the property. So the third one to get in with no money is you option up the property or you put it under contract, and you get early access to the property to either renovate it or add value through a development approval or a development application. So you get in, you add value, and then over the course of, let's just assume you're going to add value over a 6 to 12 month period. So tie this property up for 12 months. So in that 12-month window, you're going to add value, manufacture your own equity, and then settle on the property at the higher amount. You've got to obviously have the serviceability to do the settlement at the end, assuming you're settling. Otherwise, you can just on-sell the property and not have to settle at all. So that's the third way to get into property, starting from zero with no money. And you'll notice a common trend between the three. They're all a little bit creative. There's not many people doing these strategies, and if you're not in this category where you're doing a creative deal or working out how to get into property with no money, then you're going to be like everybody else and have to save a deposit up for however many years it takes you to save that deposit. You're going to have to wait to get into the property market and just buy property like everybody else. I know when I first started, I was a really great saver. I had a lot of savings. I went and spent that on a car, which was a bit silly, but I just went and spent it on a car, and I thought, this car, when I go to buy a property, I'm just going to sell the car and then use that as my deposit. And even back then, I remember thinking, man, it takes a long time to save such a small amount of money. And when I worked out and forward projected what my savings were per year, and I mean, in the early days I was sleeping on a mattress, not that I couldn't afford a bed, but I just didn't want to have to pay for a bed because I put all of that money into savings. So I remember doing the maths and thinking, shit, I'm going to be saving for a long time just to buy like my first property, let alone try and then duplicate it. And back then I was thinking I'd just buy like a $200,000 or $300,000 property, and I'd just be buying like really low end properties and try and duplicate that every couple of years. But obviously that isn't how it worked out, but that was what I initially thought. This is going to take so long. And when somebody showed me a development strategy where I could buy a multi-million-dollar property with using none of my own money, I didn't have to sell my car. I got into the deal with no money, made a huge amount of profit, and it was a win-win for the seller of the property as well. So he vendor financed it. I gave him more money than what the property was worth. So everybody came out winning from the deal that I did. So if you're looking at doing your own deal and starting from zero, or you're tapped out with your own capital and you don't want to wait, then it's possible to get into property or buy additional properties with no money. So hope you've gotten value out of that. If you want me to share more about no money down strategies or other examples or other times where I've done it and been able to leverage and amass multiple properties within a short period of time, more than happy to share that with you. Just leave me a comment or send us an email direct. Thanks. Have a good one. Bye.